slides.
That's cheating.
Yeah. I've got a spreadsheet, but I don't need to go to it.
I mean, I was just going to throw up a shot from the website if need be, but whatever we need to do.
I'm good. I don't need to go to anything, Jeff.
Okay.
Normally I would have slides, but I didn't think we were doing them, so.
We're not. Nice golf balls in the background there, John.
Oh, you can see them? Yeah, I get a sleeve of every golf course I play.
We got to go out next time. Next time we're able to travel.
All right, you guys are ready? We're live.
Yep.
Can I do an introduction? We'll take this away. All right. Good morning, everyone, and thank you for joining us. On behalf of MoneyShow, I am delighted to introduce panelists John Markman, John McCamant, and Kelly Wright, and your lovely moderator for top stocks to buy in an election year, Jeff Hirsch. Jeff, take it away.
Thanks, Rena. Hello, everybody. Yes, exciting election year times. We have our president campaigning around the country, and it's really heating up. Should be interesting when they debate. But we have a group of friends here that I know well. A great set of stock pickers and also market analysts. So I'm going to just hand it over to each one of them to tell us a little bit about themselves real quick, and then we'll jump into stocks and the trends they're looking at. Kelly, where are you calling in from?
I'm in South Orange County, California, down in San Juan Capistrano.
Great city.
Yeah, that's nice. Got our little Amtrak and then the Mission, and it's very cultural.
And give us a little quick 15-word bio.
I'm the managing editor of Investment Quality Trends. We've been publishing since 1966. We were started by my mentor and predecessor, Geraldine Weiss.
An exceptional and iconic person in the investment industry. Mr. McCamant calling us in from Smoke City. Where are you at? You been outside at all?
Just a wee bit there, Jeff. We're here in San Francisco, patiently waiting for smoke to clear. We still are in the land of biotech. This is the home of Genentech. I've been following and picking biotech stocks since the late 80s, so basically almost as long as the industry's around. And with COVID-19, we think that biotechnology has kind of risen, or there's the cream of the crop potentially, and potential investments and maybe some solutions.
And like myself, you took over the business from your father, correct?
Absolutely. My father, Jim McCamant, started a medical technology stock letter in 1983. I believe that was the year Genentech DNA went public.
Wow. Yeah.
Yeah, I remember our pops used to talk.
Oh,
Mr.
yes.
Markman, coming in from LA, right? Where are you at?
No, I'm in Seattle.
Seattle.
Yeah, from the middle of a smoke cloud.
There we go.
So my name is John Markman, and I published 6 newsletters, 2 on the Weiss Research platform, 2 on the Forbes magazine platform, and 2 on my own. And if you want a copy of the information that I'm providing today, you just email me at john@mcillc.net. I have a pretty cool graphic for that.
You've been taking notes from was it Kleintop? You got to get your drawings better than like Kleintop.
I got that from Jimmy Fallon. Anyway, if people want a copy of the information I have, just email me at john@mcillc.net.
All righty. Interesting. All 3 gentlemen are on the left coast. Anybody catch any waves this summer? Anyone get out there? I caught a couple down the shore, a couple longboard waves.
Yeah. I actually got out in the water quite a bit this summer. Praise God. Yeah.
Ja Rastafari. Excellent. So I'm curious, just go around the horn. What are you guys looking at, investing trends that you're focusing on, especially with this COVID situation and this very contentious election coming up? And all the other things going on in the country, this year, what are you expecting? Maybe a little bit next year. Kelly, what are you looking at?
Well, Jeffrey, the way we view the world is we just like to buy low risk. We've got a process where we define what we call high quality, and then we look for repetitive areas of of low price and high dividend yield. So we don't really do any top down stuff. We don't make any like macro things.
Yeah, but are you seeing any differences in what's rising, what cream's rising to the top with what's going on out there in the world right now, or it's not impacting?
Well, you know, in McCamant's world, anything that's tech related, I mean, forget about it. That's you know, that's what's got the wind at its back.
You want to give us a little bit about the stocks do you like? You got Cardinal Health on there. That's got to be part of the benefiting from the health pandemic situation.
Well, I think it's going to, because, you know, they're going to be part of the distribution process of any vaccine. They've got a deal in place to distribute, along with, I think McKesson has one too, and along with AmerisourceBergen. So those are the big three in the distribution area. The thing about Cardinal Health is they've really cleaned up their act, and you know, so we're starting to see their earnings. There's a reason why they were in my undervalued area, because they deserve to be. They're getting it together. So we like that a lot. I can talk to you about Comerica, which is a nice little regional bank. Obviously, when COVID hit, no one was ever going to get a mortgage again, because, you know, real estate was going to go straight to hell in a handbasket.
Now everyone's moving out of the cities and lots of mortgages are flying around, right?
Yeah, absolutely. I mean, never. And so it's interesting. Comerica's major businesses, mortgages in California, Arizona, Nevada, and Texas, where there's no real estate activity whatsoever going on, you know. No, it's tongue in cheek. Those are like the hottest markets on the planet.
That was sarcasm.
Little bit, just a tad. So, yeah, there are some regional banks that had to reduce their dividends. And, you know, Wall Street often will do ready, fire, aim. And, you know, Comerica was one that they cut more in half on a price basis. But this is a company that's really, really super well run. They had their house together, house in order. They haven't cut their dividend, and it doesn't look like they're going to. That's at a deep, deep, deep value. So I would like that. Eaton Vance, EV.
Another bit. What's the yield on those, on Comerica?
It's like in the high sixes.
Nice.
Which is really, really, I mean, that's a stock that's usually kind of between 3.5 and 3 3/4, something like that. So they blew it up, and that's why the yield went so high. But that's a hell of a value right there.
And Eaton Vance, you're saying?
Yeah. Just, I mean, it's you know, it's an old-fashioned mutual fund company, which, of course, mutual funds are going out of business because of ETFs. Except that these guys happen to have a huge chunk of the qualified plan market, and they're also getting into more individual management. And the thing about all the companies I follow, Jeffries, I look down underneath their hood, and you know, geeky stuff like return on invested capital and free cash flow yield. These guys are all killing it. I mean, they're making money hand over fist. So
I mean, last I checked, Eaton Vance still was pretty solid at stock picking. That's one of the.
They're pretty good at what they do. They have been for a long time, but it's just it's another one of those things where it's out of favor, which is why we're interested in it, because it's at a low price, high yield. The other two, real quick, Omnicom Group. Omnicom is the symbol's OMC. It's a collection of like 1,500 individual agencies that are all under one umbrella, but they do everything soup to nuts in terms of advertising, whether it's digital, print, media, radio, TV, you know, yada, yada, yada. They do the whole thing. And what's interesting is that even though each of these little shops is under the same umbrella, they all compete against each other, even though they're all under, you know, so it's a real competitive atmosphere. Now, obviously with COVID and, you know, we've got some shaky economics. No one is ever going to advertise ever again. So you don't need an advertising agency or someone that can do PR or someone who does all the things that Omnicom does. Yet when you look underneath their hood, they're still got double digits return on invested capital, free cash flow yield. But the street's got them priced as if their earnings is going to be at a 60% discount forever. So we think that, we get a vaccine, we're going to get some return to normalcy. Maybe somebody might want to hire a marketing firm again, a PR firm, just maybe. You never know.
Marketing is still everyone's number one priority.
Yeah, last time I checked. Last one, Reliance Steel. I mean, it's a good old-fashioned materials company, and like the name sounds, they make rolled steel, which, we get into a recovery. We have to see how the election turns out.
We'll get to that. We'll get to that in a minute.
If there's an infrastructure bill at some point, I don't know if Congress ever starts to legislate again. I don't know.
That's the big question, my friend.
They might do an infrastructure bill, and if they do, somebody like Reliance Steel is going to do really, really well.
Excellent. Thank you, Kelly. Mr.
Sure.
McCamant, biotech, huh? What are you focused on?
Interesting times. In election years, drug prices become targets for both sides, basically red meat. Biotech is a subset of the drug pricing industry or the drug industry. Drug pricing is always something that hits home with all voters. I think this time it should be a little different. I think the issues are a little bit bigger, and particularly with COVID-19 still looming large. And in particular, we're having a lot of trouble, are still looking to understand the disease, but also we're looking for vaccines, therapeutics, and we still don't have enough tests.
And testing.
Yeah, so 2 types of tests, antibody tests, and then straight whether you have it or not. So there's a huge amount of work for the biotech industry to do. And as Kelly pointed out, there's multiple angles, but just distributing a vaccine, for example, could be a Herculean effort. Hundreds of millions of vaccines are going to have to be delivered, if not billions.
Yeah.
John, are vaccines a high margin business?
A great question, John. Historically, they've been more commoditized until Merck has come up with some of the HPV vaccines. If you come up with something proprietary, you can put a small premium on it. We had a flu vaccine that came out that was nasal. They were able to put a small premium. But otherwise, for example,
you think with the global health situation that they'll be able to have a high margins on this, or it'll have to be more commoditized?
They'll get a reasonable margin, and that's fair business, and they'll be able to provide these at a reasonable cost also, particularly to some of the smaller companies. You don't expect a company whose only business to just charge it at cost, but that's going to be a significant amount of need. We're looking at a 50% hurdle to get a vaccine approved, which is pretty low efficacy about what we have with the flu. That would lead us to probably having to have boosters or new vaccines almost every year. I'm going to say,
like the flu.
Right. Go ahead, Jeff.
You like the flu, right?
Well, the flu is another big opportunity in vaccines, and I'm going to go to my top pick today here. Is Vaxart, VXRT, and they are making an oral vaccine. This is at least 20 years in development, and they just started or got the okay from the FDA to start phase 1 yesterday. For example, when Cardinal goes out to distribute 100 million vaccines, it would take them months to organize and actually deliver that vaccine, let alone the needles, the vials, fill and finish. Each injection will have to have a separate mask, disposables. It's basically off the charts what we're looking at. We have a potential solution in this technology from Vaxart where it is a pill. We find that extremely interesting as far as convenience. In addition, we're looking at 2 types of immunity for COVID vaccine. Traditionally, we're looking at systemic immunity and mucosal. All of the vaccines in development are focused on systemic immunity. Mucosal could be even more important, as this is the port of entry into your body, i.e., if you could have antibodies in your nostrils, in your lungs, in your mouth, in the mucosa, they could fight the virus before it even enters the body. There's potentially to have sterilized.
Very
immunity.
cool.
It's amazing stuff. It's also one of the more advanced vaccine programs in that they've already tested this in 300 to 400 patients for norovirus and the flu. So to date, we've got a very safe pill. We just put it into human trials yesterday, In addition, they've also got some of the funding from Operation Warp Speed, just the initial, but what they're doing is running non-human or primate studies right now, which are very important in the vaccine space. So this is an under the radar. There's a number one question we get is, why doesn't everyone do this? Or why doesn't Big Pharma have it? Well, one of the keys is that oral delivery of proteins or vaccines is very difficult, as our stomach literally just degrades it immediately. They have the technology to actually deliver the vaccine through the gut and into the small intestine where they can get a specific response. This is game-changing technology.
Really quick, John, are you supposed to be on the cover slide or did you have a chart up?
I had some, but I can't. My slides are not working as everything is going haywire today. So we all have no slides.
Okay.
That's fair.
So Vaxart is in a unique position. They're following some of the other vaccine companies, and we believe they will shortly not only get government funding, they'll probably be in position for Bill and Melinda Gates funding, as the third world will never be able to deliver vaccines as they require what's called a cold chain. So they have to be kept refrigerated. Some of these are required to be shipped at 20 below Celsius. These are just, huge technological feats to deliver that vaccine around the world. It's literally, the Vaxart technology uses freeze drying technology to create the pills, slice and dice them, and throw them into foil packaging. This is some of the simplest, cleanest technology to what potentially is the biggest medical problem of our lifetimes.
Wow.
That's
So
huge.
that's our biggest one. A second investment, or we would go after, is Aspirion ESPR. They recently had approved, right when COVID started, a cholesterol pill. So they are literally have a sales force sitting like we are in our homes, making contacts, but this pill is ready to explode basically, as they have not been able to basically generate any sales. So as soon as we get a little opening on the virus and they can start hitting the sales office and making calls.
Is that a statin or is that something else?
I love your question, Jeff. It works on top of statins and in addition to statin intolerant patients. So the number one thing people say with LDL is, well, just take a statin or generic Lipitor, it only costs pennies. Well, there's a huge amount of patients that statins don't work for, or they don't get their target LDL lowering. This pill would work on top of that. In addition, it's well priced in the $4,000 range a year. So this is a traditional price for a cholesterol drug, and pills, or once-a-day pills, are the absolute sweet spot of the pharma industry, particularly for chronological drugs. So ESPR, with approval, they're de-risked. And as we saw yesterday, there was a monster buyout in the biotech. Gilead paid $21 billion for Immunetics. So a company like Aspirion is really teed up for a potential acquisition, ESPR. Three other names we focus on. One is also is a new recommendation like the Vaxart is CLDX. They make monoclonal antibodies. Something that we think is very interesting are bispecific antibodies where they target two different targets. So basically you're getting two cancer drugs in one monoclonal antibody. Immunetics was basically bought for $21 billion for one antibody. It's what's called a conjugate, which has a killer payload attached, but there's almost no pipeline with the Gilead acquisition at $21 billion. Celldex is the old monoclonal antibody team from Medarex. Medarex has created a couple of these immune oncology drugs and was a big buyout by Bristol Myers. So CLDX, we think, is an excellent platform in oncology. In addition, they have what's called a mast cell drug, or something that would work in allergies. That's another very large opportunity.
Especially back east right now with the pollen.
Absolutely. It's a good mast cell, could be a very important drug. I'd like to segue to Sangamo, SGMO. We believe this is one of the leaders in gene therapy and cell therapy. They have multiple partnerships, and they will have some hemophilia A data with their partner Pfizer. This one-time gene therapy potentially replaces over 50 to 100 infusions a year per hemophiliac patient. This is a game-changing technology. And people have been reluctant to a lot of the gene therapies because it's very new therapy and just cutting edge one time. But imagine not having to go into a hospital or an infusion center every week, which potentially has COVID-19. I'm sitting at home, hemophilia taken care of, out having an active life, not exposing myself to the virus. It's another case where we just see biotech and advanced technologies really finding their home and their sweet spot as their answers to what's going on with COVID-19 environment. The last stock I want to mention would be Madrigal, MDGL. They're the leader in the space for NASH, which is non-alcoholic hepatitis. This is a multiple billion-dollar opportunity of fatty livers and just very sick people as their livers eventually lead to cirrhosis. This also is a once-a-day pill. We feel this is a best-in-class opportunity, and it's certainly the things we look for regularly is best in class. And we believe the Vaxart with a pill will also be that for the vaccine, Jeff.
John, have you looked at a drug discovery platform called Schrodinger's, backed by Bill Gates?
Yes, we have. Haven't looked at it recently. Any specific questions, John?
No, I just wondered whether you think that that kind of drug discovery platform is realistic. Is it something that's valuable now, or is it something that's kind of pie in the sky and it's going to be available more in the deep future?
Well, I like the pie in the skies. We need to have, the academics to take the big shots and take the big reaches. But historically, this capitalist business model of profit for new drugs, for whatever reason, because Europe has a lot of these business models where they have a lot of really high-end think tanks and academics going after drugs. It's the one-off, it's the hungry smaller companies that take the risks, that somehow this is pure capitalism, 1 in 100 shot drug development, and big pharma has these libraries of tens of thousands, and I'm sure that these guys can access that also. Yet time and again, we're finding intuition and just the smaller, harder players on a one-off basis deliver in the biotech space.
Thanks.
Hey, Mr. Markman, why don't you take your turn and run down the stocks you like? You got some of your usual high techs and a couple other new ones, interesting ones.
Yeah, I focus primarily on technology, as you know, and particularly in the great digital transformation, which I think is the investment opportunity of our lifetimes. By that I mean, when we used to listen to music on CDs, now we listen to music streaming on Spotify. We used to go to the movie theaters or get CDs to watch Blu-rays, to watch movies, and now we stream them on Netflix. And that is multiplied throughout the business value chain. So almost everything that used to be physical is going to become software. That's our main focus right now. But I did also look at the big picture, and the big picture for me is that a new economic and stock market cycle began in mid-March of this year, and with the gigantic infusion of money by the Federal Reserve. And whenever the Federal Reserve has opened up the taps and created the money at the scale that it did back in March, and it continues to this day, the S&P 500 has risen by more than 5 times over the next 10 years. So the big picture for me is that I'm looking for the Dow to move to around 90,000 5 years from now.
You're not fighting the Fed.
The Fed is undefeated.
Quite true. So is the tape.
So don't fight the Fed.
That's 3 times. That's almost like 2.5 times my 38,000 prediction from 2010 of Dow 38,820. 90,000 Dow, huh?
I think you'll get there. The last time we saw such a big infusion was 2009, the beginning of QE. We had QE 1, 2, 3, and 4.
Mm-hmm.
Now we've got basically QE infinity.
Yes.
And the Fed monetizing all the bond market, the bond market. So this is really a fantastic infusion of money that reaches down into stocks, and I think that people ought to see this as a 5-year cycle, and we're just at the very, very, very beginning of. In addition to that, so those are the 2 big pictures, right? The monetary piece and the fact that we're moving into a digital transformation. The stocks I like for the digital transformation are large, primarily because we're in the big get bigger market. the big companies have a lot more advantages than the smaller companies. Smaller companies are going to fight for survival, and mostly the good ones will be bought by the larger companies. So all the stocks I'm going to give you today are pretty large, but I think they're going to get a lot larger. Number one on my list is NVIDIA, NVDA. It's trading at 522 right now, and it's got a $320 billion market cap, which is quite large. They announced a acquisition of, they announced the acquisition of ARM Holdings earlier this week. Mm-hmm. And they had a major acquisition of an Israeli company called Mellanox a couple of years ago. So what people think is that NVIDIA is just a regular hardware company. It's just a semiconductor company, but it's really not. It's a vertically integrated artificial intelligence ecosystem, complete with third-party developer support. And I think we're going to see NVIDIA solutions for automotive, healthcare, telecommunications, and financial services. Just like they're one of the brains behind the Tesla electric car and all of its autonomous driving. So AI is still very early in the opportunity. I think it's at least a $5 trillion opportunity going forward. NVIDIA trades at 44 times earnings, and I think it'll get to $600. Right now it's 520. It's 522. I think it'll trade over $1,000 in a year. So that's NVIDIA. Buy it on dips.
And you like the big Facebook, huh?
Another company I like is called Facebook. You may have heard of it. It's trading at $271, and it's a $760 billion company right now. They operate the world's largest social media platform with 2.5 billion monthly active users. And in addition to Facebook proper, the company has Instagram and WhatsApp, both of which they are just beginning to monetize. So the company is seen as a privacy predator, but you have to understand that this is not an open web company. This is a company that people opt into and sign terms of service. So it's really not it'll never really get prosecuted on the privacy side effectively. Facebook Shops is a new initiative where Shopify is helping them create almost an Amazon-like atmosphere in certain parts of Facebook. And I think that's a really big opportunity, especially because they've also got the billion user WhatsApp program to monetize. So the shares traded at 26 times earnings, which is pretty freaking cheap. And I think it's very reasonable given the size and scale of the business. So I'd look for Facebook to double over the next 4 years. Another company I like a lot in the similar space is called The Trade Desk. This is the smallest company I'm going to recommend. It's TTD. It's trading at $438, and it's got a $20 billion market cap. Trade Desk operates a programmatic advertising platform that allows advertisers to buy digital ads in real time. So there's two big markets right now for advertising. One of them is Google, and the other is Facebook. And for everyone else, there's Trade Desk. So, sooner or later, all of the $260 billion spend for advertising is going to be digital. And the Trade Desk has become the de facto platform for digital ad sales. So I really like that a lot. Shares trade at 106 times forward earnings, which is obviously very rich, but it's a singular company with 35% annual growth over the last several years. It's going to be a big company. I'm looking for that one to double over the next 3 years. Trade Desk. My next stock is Dell Technologies, and this is a fascinating deal. It's trading at $67, and it's got a $49 billion market cap. This is the newest company run by the billionaire Michael Dell. And it does sell the Dell computers that you probably get flyers for in the mail.
I'm using one. I'm on one right now.
There you go. And you like it?
It's been working great for years. It's very solid.
Very solid company. Dell is a holding company that sells personal computers, workstations, data center servers, and infrastructure. But the most important part of the business is this: is its 81% stake in VMware. VMware is a virtualization company used by large enterprises in their cloud infrastructure. So VMware is a public company with a $59 billion market cap. And so Dell's 81% share is really hidden within Dell. So the play here is that Dell will ultimately spin off its VMware holdings, and I think that'll create a lot of value for Dell shareholders. When that's going to happen, I have no idea. Probably within the next year. So my price target is at least 80. Right now it's 67. And by the way, it only trades at 9 times forward earnings. And my last one is kind of interesting. Not a lot of people know this, but the S&P 500, the S&P part of the S&P 500 is a company called Standard & Poor's, and there's a company called S&P Global Inc., which creates and sells indexes around the world. Mm-hmm. So if you believe that the world is moving towards passive investing, which I do, and I think that most of our panelists do, then S&P Global is a very high margin company creating those passive indexes and reaping fees from each one of them. Revenue growth has been terrific. It's trading at only 30.5 times earnings. I think a lot of this stock, and I think it'll double over the next 4 years.
They got to make all these indexes to create all of the ETFs that people trade. They're based on something, so I think that's a solid play. So we've got a few minutes left. Rena, are we doing some questions, Q&A? I had a few stocks I wanted to throw out there. Let me just throw a few out quickly. In the COVID area, we've had Abbott and Regeneron on our newsletter portfolio list, picked using fundamental screens. Abbott, in addition to its solid earnings and revenue growth from the core businesses, infant formulas, medical devices, and drugs, they've got a new COVID antibody test that could be a game changer. Again, Regeneron, their antiviral antibody cocktail treatment has been added to the clinical trials in Oxford. It's the first one of that kind, specifically designed for COVID therapy, being added. And of course, their core biz is still growing as well. Abbott, ABT, Regeneron, REGN. Chinese express delivery company Zito Express did get stopped out of our list on a little bit of an earnings myth, but they still got solid market share of that Chinese express delivery market. KB Homes, KBH, or Zito is ZTO. KB Homes, KBH, regional developers, seems to be following the exodus out of the cities to the different regional areas and building there, following that sort of COVID city exodus. And a couple of old stodgy stocks that do have a foot in the technology future: AT&T and Verizon, tickers T and VZ, will benefit from the 5G move, and we do everything on our phones, and they got that business there, and they both have some nice solid dividends. So that's the stocks that I like right now. A little bit of outlook for the end of the year. John gave us some of his trends. Maybe we can go around real quick, get a couple things. I think we have a little more weakness after mid-September with the end of Q3 institutional portfolio maneuvering. Then if it looks like Trump's going to get reelected, we'll get some strength into the election, if not weakness. Either way, there'll be a likelihood of a fourth quarter rally, stronger and from a lower level if Biden wins. And then just looking out to 2021, post-election years are generally weaker under new presidents. So back around the horn real quick. Kelly, any election handicapping? Any difference between a Biden or Trump win? And same question for you, John McCamant, as well.
Yeah, I don't even go there because you're going to piss off half of the people listening. So I think, though, that the market will be higher on December 31. I think it's going to be fairly higher than it is now. So that's as far as I'll go on election stuff.
That's okay. Fair enough. And Smoke City Man?
I got to be relatively neutral also. But I think Biden is, if he were to win, he's not going to be the draconian threat on drug pricing. He's pro-technology, and particularly having lost his son to brain cancer, we see him being pro-biotech, and somebody that understands the value of the drug industry and not just a straight whooping boy. But at this point, we just like to get through the election process.
Amen.
Present company included on that one. Markman, you want to chime in on that thing or on the election stuff, or are you sitting on the fence?
No, I think that the market is pricing in a Biden victory. It seems pretty clear. And I think it'll, as I said, I think the market's going to go up 5 times regardless of who's in the office. the White House, because the Federal Reserve is really where it's at as far as liquidity creation for investors.
Valid point. You want to get some questions from the attendees, Rena? Anybody
Yeah,
have anything out
absolutely.
there?
We do have a couple questions. Let's see. The first one came through, and in regards to Vaxart, why is Armistice Capital dumping huge amount of stock over the past several months?
Great
They
question.
may have been at a lower price, but there's been a $200 million investment made by RA Capital, which came in about a month and a half ago. That's a significant institutional investor. They have a huge COVID-19 team, and they made an investment in Novavax many times lower for that price. So we're very comfortable with the new institutional investors with Vaxart.
So the other one just taking a couple of bucks off additional investment off the table?
Yes, some previous low ballers, they reaping some of their rewards.
That's allowed.
Next question. How do you distinguish between game-changing biotech developments that are too hyped versus actually real?
That's a great question. One of the
Evidence.
places we would start, human clinical trials is important. It's to do a huge amount of work in animals, and the FDA is the #1 mantra, do no harm. So they really emphasize safety. If you are in human clinical trials, you can feel very good about that. And that is a significant hurdle, particularly with things like gene therapy and cell therapy. They're one-time treatment, so they're going to be very, very cautious before. So I think that is an excellent line is, are you in human clinical trials? And also, have you shown you've been humans with a disease to start showing proof of concept?
I think that's super important for the COVID treatments, vaccines, and the testing. Other question?
Yeah. I think Kelly mentioned this earlier. What was the company and the ticker that was making the vaccine?
No, I think that was John McCamant. It was Vaxart, I think. VXRT.
VXRT, exactly, Jeff.
Right?
Yes.
Got it. Thanks. Next one. How much longer do you think retail will continue to do surprisingly well?
Forever?
Never ever count out the American consumer. And my number one pick now and forever on the U.S. consumer is MasterCard.
Good call. I mean, we've managed to figure out how to buy and deliver stuff being in lockdown. So I think the future is bright for retail and consumerism.
People like to buy stuff.
Mm-hmm. Like golf shirts, right, John?
Absolutely.
I need some more.
Now if we could only go outside.
Oh, you got to come east.
Dang.
Yeah, it's nice in Florida.
Sorry. Except you got to quarantine for 14 days in New York State.
Saw the sun for a few minutes out my window. I couldn't believe it. It's so awesome. I love this. I love your planet.
I have a couple people asking, do you still hold any of you Boeing, and do you have any opinions on their dividend?
We're concerned about the airline industry. We have JetBlue. We got stopped out of United. So I'm concerned about people actually getting back on airplanes and doing business travel and maybe even some personal travel. Gentlemen?
I follow Boeing. I think their defense component is the straw that stirs the drink of that company. They are so important to the Department of Defense in the areas that they deal with. I don't know how long it's going to take them to get out of this crunch, but I don't think this is an Eastman Kodak. This is not a Sperry Univac. This is not a Polaroid. I think that the dividend for Boeing will be restored at some point because they're just too important to the defense industry.
And as far as I'm concerned, I like the parts providers to the airline industry. And my number one pick in that space is TransDigm, TDG. It's a $27 billion company and trading at around 510. But this is a company that if Boeing and the rest of the airline industry just show a little bit of optimism, you'll see it go right back to its highs over 700. That's TransDigm, TDG. Extremely well-run company.
Another good question, if you're ready for it.
Sure.
Many of the predictions were based on price to earnings ratios. However, given the current circumstances, is there a potential for a bubble to pop on some of these tech stocks mentioned?
Bubble popping. Didn't we have that happen already?
No, that wasn't a bubble popping.
What was that?
That was a burp. Yeah.
When we talk about bubble popping in the past, what we were really talking about is the Federal Reserve taking away the proverbial punch bowl. But at this time, the Fed is still making punch. And
they promised to make it through 2023, pretty much, right?
That's right, that's right. And now we're going to be looking for that as a peak and coming down from there. So there will be some turbulence around that number. But I think what really people have to keep in mind is that at the Jackson Hole Conference, the Federal Reserve announced a real sea change for the way that they see liquidity. In the past, they've always wanted to squelch inflation before it got too great, and they would look in the tea leaves. They didn't need actual inflation to fight. They would fight inflation even if they thought it was on the horizon. And now they have a completely different attitude. They're looking at inflation as something that they want to increase and not decrease. And as long as that's their paradigm, I think investors are in good shape.
Yeah, you used to be able to tell a Fed governor that was driving in their car because they had that bumper sticker that said, "We'll break for inflation."
Yeah.
But today, to what John said, inflation is their friend. They want it, they need it, and
classic.
Yeah.
Well, that is all we have time for, guys. But I want to thank all the attendees for all their great questions and all of you for all those wonderful stock picks. I did type them all into the chat, so if anybody's looking to recap them, just scroll up. They're all there. But any final thoughts?
Oh, I think I gave mine.
I just say that if people want my notes, you can email me at john@mcillc.net and put the word slides in the subject line.
Yeah, just Kelly, Kelley at iqtrends.com. If you want any background on the stocks I talked about or anything else, recipes, whatever.
Yeah, I got some recipes.
I can be reached, or all of our information is bioinvest.com. We'll put a few maybe fly tying recipes on there for you fishermen. How about that?
There we go.
StockTradersAlmanac.com is where you can find me, and I got a nice veal Milanese recipe for you over at Rugel's.
There we go.
Yeah.
Now we're talking.
I'm going to be looking for those recipes.
Amongst many other things.
And I did type all of those emails and websites into the chat as well for easy access.
Excellent.
Thanks, Rena.
Thanks,
yeah, you're
gentlemen.
very welcome. Thank you guys for joining us.
Thanks, Rena.
Likewise.
Guys, good to see y'all.
Take
Take
care.
care.
All right. Once again, thank you everyone for joining us. And as a friendly reminder, if you missed any session or would like to replay sessions on demand, you can do so by visiting virtualpass.moneyshow.com. Your virtual pass includes timely information from Money Show's virtual expo, plus InfoPack slide presentations from our speakers, so you can review these key points at your leisure. Thank you so much for joining us, and enjoy the show.
You still there, Rena?